Well, it's time to do business again on Business Incorporated. We're giving you updates from the world of business. And for this episode, here's what we have prepared for you. With the trade war going on, Africa must look inwards and the ports become very important at this time. Unfortunately, in South Africa, the rand has fallen to an all-time low. New deals being signed. Kenya and Israel have signed a 5-year energy deal. Welcome to the program. I'm Ini John Mekwa. We start from the metal space. Gold rose for more than 1% on Thursday as investors flocked to the safe haven bullion after the United States hiked tariffs on China, which is the top metals consumer, escalating the already heated trade war despite a 90-day pause on tariffs for other countries. And it's important to note that that pause is on the reciprocal tariff and not the initial at least 10% for the country. So spot gold is up 1.2%. This is a huge move. Yesterday we had just about $3,000. Now we have $3,119. After that 1.2%, 1.8% up is what U.S. gold has recorded. $3,135.50 per ounce. Spot silver is unchanged at $31.08, and platinum is down 0.5%, $932.81. Palladium is also down by almost what we have for spot gold, 1.20%, and settles at $922.72 per ounce. U.S. President Donald Trump has said that he would raise the tariff on Chinese imports to 125%. Yesterday, about this time, it was 104%. And the world's two largest economies have engaged in a series of tit-for-tat tariffs over the past week. Gold, on the other hand, is a hedge against global uncertainties and inflation and has risen more than 18% this year alone, driven largely by Trump's tariff plans, expectations of interest rate cuts by the Federal Reserve, geopolitical tensions in the Middle East and Ukraine, strong central bank buying also to urge an increased investment in gold-backed exchange-traded funds. According to minutes from the Fed's latest meeting, policymakers were nearly unanimous last month in warning that the United States economy faces risks of higher inflation alongside slower growth, with some difficult trade-offs that may be ahead. While non-yielding bullion stands to lose its appeal if inflationary pressures force the Fed to keep interest rates higher, traders now await U.S. Consumer Price Index data that's due later on today, and then there's the Producer Price Index that's due tomorrow, Friday, and this will give direction in the coming days. Closely related to that is oil prices. It fell around 1% on Thursday as U.S. President ramped up trade war with China, even as he announced that 90% pause on tariffs. We see Brent is down 73 cents to $64.73 a barrel, while WTI 61 cents, $86 a barrel after I dropped 0.8%. We know, of course, that there's the threat of 125% tariff on China from the United States. China has also announced an additional import levy on U.S., imposing 84% from Thursday. That's today. The Keystone oil pipeline from Canada to the United States remains shut following an oil spill near the Fort Ransom in North Dakota, while plans to return it to service are being evaluated. Well, talking about oil now, it's not directly affected, or it's not supposed to be affected, because the tariffs are not on petroleum products, but we have seen the volatility in oil prices since this tariff war started. So let's delve into this now with the Vice Chair of African Energy Council, Mr. Chinan Dikwa, joins us virtually. Hi, Chinan, good afternoon and welcome to the program.
Hi, Ini, good to see you again.
Great. So they say when two elephants fight, the grass suffers. It seems oil has become the grass in this scenario?
Absolutely, you're 100% right. There's an indirect correlation with anything happening in the economy with energy, oil and gas. And particularly on the front, just to be very clear, US tariffs have been laid down. Some of them, of course, have to do with some petroleum products. So that's clear enough, gas going to LNG going into the US, some petroleum products as well. But fundamentally, I think what's affecting the crude oil market today is the fact that there is a risk of a recession. Why is there a risk of a recession? Exactly what you described there. President Donald Trump has put massive tariffs on the global economy. Even though he's scaled some of them back, the reality of it is the initial tariffs are still there, a minimum of 10%. Now, with that kind of tariff, what that means is everything becomes more expensive. If everything becomes more expensive, that means you and I and many consumers will not put hands in the pocket to spend money. If we do not spend money, ultimately it means that the economy slows down, ultimately potentially going into a recession. Now, in a recessionary scenario, that's a very clear thing. Demand for oil products decreases significantly. Just a given. It always happens. When you have a recession, demand drops. So that's what people are pricing in. $64 per barrel is a vote of the vote that many traders have right now of where we are at the moment. But to be honest, Ini, there seems to be more downside coming, unfortunately. Putting more barrels onto the market starting this April. Donald Trump is negotiating with Iran, potentially a nuclear deal. If he gets that deal, that would allow them to put more barrels onto the market because that's what they want. So more barrels coming. Supply and demand will mismatch. Ultimately, price will take another hit.
Yeah, another hit. But when we look closely at this, it seems the fight is becoming more defined now, just having the US and China in the ring at this time. And we know the position that China holds when it comes to demand for oil, which obviously we've seen reflect there. If this intensifies, which is the direction it seems to be taking, what else can we expect with oil and consequently other commodities and economies?
Exactly what I'm describing there. The reality of it is anybody watching this has to recognize that we have not been in this situation for the last 100 years. We've never been in a situation like this where there's a massive trade war. I think the only thing to think about is probably the 1930s, just before leading up into the Second World War, I'd say. We've never been in this situation. And even though, I'm at this point, even though there's been a pause for 90 days now, to your point, there are still at the minimum 10% tariffs on most of the products. So 10% tariffs, one. Automobiles, all of them coming to US, still have 25% levy tariff on there. Steel and aluminum still have huge tariffs on that front. And of course, like I said there, we are in a situation where OPEC would start to put some barrels into the market. So when you look at it structurally for the oil price, honestly, there is a downside risk. And it leads me to talk about Nigeria. This leads me to talk about Nigeria. Our budget, our fiscal budget is based on a $75, oil price. Today we're talking 64. So you can see it very clearly. We signed the budget on 28th of February. Today, as we're speaking, we already have a deficit already. So how do you finance this budget? And I think there's a broad question here with regards to our planning strategy going forward. We made the same mistake last year, with all due respect. And here again, we're doing exactly the same thing as production of 2 million barrels, 2 million barrels per day. Today, with all due respect, we're about 1.8. So on a volume standpoint, there's a deficit. We haven't quite hit the mark. Also on a price standpoint, we're still below the mark. So there is a problem. How do we finance this budget? And I think that's the worry that many people will be having in Nigeria.
Yeah, it is a worry. It's just a worry. And as you noted, we saw a drop in our last production. And unfortunately, we do have some scenarios that are still threatening the production even more. We had some youths from Delta State stopping the production. So it looks like, I mean, really, it's going to be a very big deal for Nigeria in the coming days with this drop in the price, the threat of further drop, and also a drop in crude. Perhaps the country should look to non-oil exports or agriculture as a way to buffer this that's coming at us at this time.
100%, 80, 100%. Oil accounts for 90% of our export earnings. and our foreign exchange. So it's a huge deal. Like you said there, if you go to finals, we have a community there, the FFA community, I think, who are threatening. They gave them a 10-day ultimatum, and it looks like they are willing to go and blow up some pipelines. They've made that very clear. You look at LNG, Nigeria LNG, just segue a little bit. They've had huge challenges over the last couple of months, again, with pipeline vandalism. So when you have this scenario where we need to finance a budget, which is about 55 trillion naira, it's about 36 billion USD. We need to finance that budget. A lot of the money to finance that budget comes from our crude oil sales. And now the crude oil sales, from a global standpoint, is in real problem. We want $75 per barrel for us to break even our budget. Today, the oil price is 64, and it looks like it's going to come down. That's number one. And number two, on the home front, here we have the threats of people trying to blow up pipelines again, so our production goes down. And even if you ignore that one, Ini, we have the forward crude sales. We've already sold a lot of our crude. Project Gazelle, Project Leopold, several projects that we've already sold the crude oil up front and taken the money. So even though we have, with all due respect, 1.8 million barrels, including condensate, we don't have that much crude oil because a lot of it has already been encumbered due to some of these contracts. So there are a couple of things that have to be done. I think we need to look at that budget again and see if we can redo that budget. I think that's a desperate situation. We need to look at cost efficiency. Look at, what ways can we cut down costs? Look what Donald Trump is doing. With all due respect, very controversial, but we need that kind of thinking. What government processes could we cut down? Where can we save money? If we do one or two of those, I can assure you our budget will not be 55 trillion naira. We'll probably end up something very, very lean and mean.
Well, I know that conversation had started, but I haven't heard it gain power. That's talking about going back to the budget and perhaps those parameters. But we'll follow the story in the coming days, China, and thank you so much for your perspective. China Ndekwal is the Vice Chair of African Energy Council, joining us virtually on the program. Thank you for sharing your perspective.
Exactly.
All right, for our DSTV viewers, now we have to hand you over to Taraba State. There's a special meeting there that we need for you to know about. So that's for our DSTV viewers. However, if you are on YouTube and you want to continue watching Business Incorporated, just switch to the next window on YouTube and then you'll see us here, right here. And also our viewers from other platforms apart from DSTV, it's Business Incorporated. All right, we're still in the oil space and what all of this trade war and tariff means. Now we're looking at diesel. Of course, we know what diesel is. We know that the articulated vehicle and big machines all depend on diesel. And we've seen some movement in the price. They've remained relatively stable in the last 3 months, about 1,085, while of course the price of petrol has been moving. What more can we expect, and how can we expect what's going on globally to affect the price of diesel in Nigeria? We have Onyeluka Chukwu Emefiene, an analyst with financial derivatives company. Hi, Onyeluka Chukwu. So what's going on with diesel? We've seen new price for petrol because of the threat to the crude for Naira policy. But how is this affecting diesel, especially when we look at what's going on in the global space?
Thank you, Ini, for having me. And also, thank you for your question. Like we all know, diesel is a commodity that is used very vital in the economy, and it is used in various industries and for various industries by various various businesses to carry out operations. And currently, we're seeing that prices of diesel has been relatively stable, and this is as a result of companies looking at other alternatives apart from diesel for cost effectiveness. Some use solar panels, some use gas power generators. And recently, we're seeing that oil prices have been declining, but declined yesterday, but as of today, it trended upwards. However, diesel has been deregulated for a while. So definitely the price of oil will affect diesel prices. But that is not the only thing that will determine the price of diesel here in Nigeria. We also have other factors that also play an important role in the price of diesel, such as exchange rate, cost of importation by these modular refineries, and as well as cost of production itself. These are the factors that go into determine the price of diesel as well. And since diesel also has close substitute and has more supply, we find out that the price will be relatively stable. Basically, that's what I know.
Yeah, so we see the price is stable. It's a deregulated market for
Mhm.
diesel, and also now it's a deregulated market for petrol. But we see, so why is the change in the global price affecting, or seems to be affecting petrol, but not affecting diesel?
Thank you for your question. Well, I would say that the change in petrol price, yes, is being is being affected by global oil prices, but there are still some factors that affect.
All right, Yeluka Chiku, it looks like you're having a bit of a struggle right there, perhaps with the technicals or so. But thank you so much for joining us on the program and for sharing your thoughts with us. Onyeluka Chiku Emefiene is an analyst with Financial Derivatives Company. All right, now moving on, the Chief Executive Officer of Aspera Global Corporation, Dr. Glenn Prince Abbey, believes that Nigeria should set up an economic war room to deal with the consequences and opportunities from the global trade war. Dr. Prince Abbey was a guest on Business Morning, believes that this will allow a convergence of individuals controlling all aspects of Nigeria's trade for a more coordinated response to the trade war.
This is the time for African countries such as Nigeria to actually brace up, even though we've heard that Donald Trump is giving a 90-day, suspension of the tariffs. It doesn't really make any difference. The important thing is for Nigeria to see this as is a threat, but at the same time, it's an opportunity. I want to propose that at this point, the president should set up what I call an economic war room. We should see this as an economic survival challenge. So now, how does Nigeria attract foreign investment to escalate the possibilities that are there within the Nigerian economy in terms of our resources, in terms of our human capacity, and so many other areas? This is what I want to look at. Now, if the president sets up an economic war room, we'll be looking at the possibilities of strengthening our setting up what I call strategic economic diplomacy.
Now, the Lagos Chamber of Commerce and Industry has met with stakeholders from Nigeria's ports to discuss ways to accelerate trade. Hurdles to cost-efficient trade was the focus, and the forum has some possible solutions.
6% tariff. India,
with the tariff trade war redirecting trade routes and partners globally, Africa's intention to look inwards and boost trade within the continent shines even more light on the ports. The Lagos Chamber of Commerce and Industry believes that speed, reliability, and cost-effectiveness with which goods are processed, stored, and evacuated through the port will determine the success of intra-Africa trade. Nigeria handles over 85% of its trade through the ports. Cargo dwell times in Nigerian ports remain exceedingly high, averaging between 18 and 20 days.
This protracted duration is often attributed to factors such as inadequate infrastructure, cumbersome customs procedures, and logistical constraints. In this context, enhancing port efficiency emerges as a strategic lever to mitigate economic strains. By streamlining port operations, we can reduce the cost of imports and exports, thereby alleviating some of the inflationary pressures and fostering a more conducive environment for trade and investment.
Connecting the port to the market is the concern of Shippers Council.
There's also need to streamline the logistics involved in these processes, and one of such is ensuring our intermodal transport, integration of our intermodal transportation, the rail, the barge operation to be optimally utilized, not just partially, but those two modes of transportation are key for us to ensure efficiency of our port. The rail, they are making the right moves with the port authority to ensure that the rails go back to the port because they are very, very critical. And it has to be a regular service provision and not skeletal service provision.
Achieving reduced port costs and efficiency to enhance competitiveness would obviously require cooperation from all parties in the ecosystem. The reason for solutions preferred here to be shared with a wider audience than those in attendance.
So it will reduce our trade volumes when
Minister of the Economy, Mr. Wale Edun, has called for concerted efforts by customs agencies within the West and Central African region to adopt technologies that will help boost revenue collection. Mr. Edun, who gave the charge at a meeting in Abuja, decries the low intra-African trade, noting that while the hike in import tariffs by the United States remains high, the action presents an opportunity for Africans to improve their trade balances and revenue mobilization processes.
It is the fourth World Customs Organization Donors Conference for the West and Central African region with the theme Mobilization of Partners Around Priority Projects in the West and Central African region. Some of the discussions at the meeting center around digital transformation and automation, trade facilitation and security, revenue collection, and the need to strengthen regional and international cooperation.
Over the years, the WTO has made significant efforts to foster dialogue with government agencies and other development partners to raise their awareness of customs administration as government institutions that play a pivotal role in achieving national, regional, and international strategic goals.
Although some level of cooperation, human resource development, and enhanced revenue collection has been achieved amongst member countries, customs leaders are calling for sustained partnership in the months ahead. This is expected to be supported by policies that will aid collections and practices.
We need projects that will assist us to develop capacities for effective implementation of preferential rules of origin and verification procedures. And the last, but not the least, is the project related to regional single window integration, implementing standards for interoperability between our various national single window systems in the sub-region.
Intra-African trade under the African Continental Free Trade Agreement has been a concern years after its implementation. This is just as trade among European countries and Asia continues to rise. The Minister of Finance wants improved trade within the region for better socio-economic development.
We can't overemphasize the urgency that we are now facing in this area. The need to quickly pivot, to build resilience, to build attractiveness, and set achievable goals for the next phase of customs modernization in our region.
For the next 2 days, participants across the region will be deliberating on these areas of concern, seeking ways to match words with action.
Yesterday was a moment of truth for the Nigerian Exchange Group, that's the NGX. They had their 64th annual general meeting in Lagos. The NGX Group reports a revenue surge by 104% to 16.9 billion naira in 2024, while profit after tax for 2024 stood at 9.9 billion naira from 5.3 billion naira recorded in the previous year, 2023. At the same time, total expenses grew from 11.3 billion in 2023 to 15.8 billion in 2024. The group's returns to shareholders also grew, with 2 naira dividend payouts declared by 2024, the highest in 2 years, and a 100% increase from the previous year. The NGX Group's management attribute the positive performance to innovations in tech and promises better performance in 2025.
I want to assure our esteemed shareholders and all stakeholders of NGS that NGS belongs to all of us. This is a platform that wealth are being shared in this country. And we believe with the support that we have been getting now from the government, from the other regulatory authorities, with all the quoted companies and all stakeholders will do much, much better in 2025. We are very hopeful this year with the administration of Tinubu, with the turnaround of the economy. We are in the trend of the $1 trillion economy. We at the NGS, we have demonstrated that during the banking recapitalization that just concluded some few months ago. We have brought some innovations into the capital raising in this country, and I believe it's just a matter of time that people can be able to at least see the fruits that have invested over the years in this organization.
The way we utilize technology in the capital market, whether that's for primary markets, whether that's for secondary markets. The other thing that should mark this year differently is we're excited about what is happening at the regulator, at the SEC. Strong dynamic leadership there. The ISB was just passed by Mr. President. We're very excited about that, and we think overall we have a capital market that, regardless of the externalities, we should be able to continue to build and to make progress.
And more from the NGX. Will Ibon comes in with intraday numbers. Will? A busy day it was for you yesterday. You were right there at the AGM.
Definitely, it was quite, the room was charged with so much energy. Shareholders were asking, nitpicking at the books and asking all sorts of questions. It was really enlightening to know that the NGX were responsible to account for the numbers that they had presented. And shareholders were really happy yesterday. A jump, 100%, you mentioned it, from 1 naira in 2023 to 2 naira in 2020.
Progress is good.
It's good. It's the good numbers. They were all smiling. I was just wishing I could smile with them. But I smiled anyway.
Yes.
Okay, let's see how major equities we track in Africa performed at intraday. Positive. Really good news after the bloody bat we've been having. Nigeria's NGX was trading up at intraday 0.49%. We see the GSE in South Africa, the outlier here, up over 4% at intraday. That's a good number for them after having losing a lot that, following Trump's tariffs. Now, elsewhere, Egypt's EGX was also in the green, 1.59% at intraday. And we also see Kenya's stock markets closing yesterday's session, that's Wednesday's session, in red territory, 2.59% down. Hopefully, there will be a rebound today. Now, let's take our gaze away a bit from equities and look to the fixed income markets, where a Treasury bills primary market auction took place yesterday, Wednesday, April the 9th, and about 800 billion naira was on offer. For more insights, Caleb Alimi, Chief Dealer, Providence Bank, joins us. Good day, Caleb. Caleb, looking at the results of the auction yesterday, some things stood out for me in that result. First, the allotted amount was smaller than the offer that was made. Is the government losing its borrowing appetite now?
Thank you for having me, Will. Good afternoon. The government didn't lose its appetite, and the government is not losing its appetite. What they seem to be losing appetite for is expensive funds. The DMO, sold at the maximum rate, especially on the one-year paper, 19.63, exactly the same as it sold at the previous auction. And then they allocated a lot less. They had about 600 billion available for sale, but they sold only 650 billion available for sale, but they sold just a big portion of that because they did not want to go above that 19.63. 19.63 translates to a yield of around 24.5%. So they are looking at their borrowing cost, and that is why they haven't gone for that. You could find that on the 90 days and the 180 days, the 91 days and the 182 days, the rates moved up on those ones, 50 basis points and 100 basis points respectively. But for the one-year paper, they held it stable at 19.63%. That's largely because they're watching their borrowing cost.
Okay, so apart from watching the borrowing costs, so what incentive now is for investors to look at the one-year paper when the short-term papers can give them, 100% return or more returns than the one-year paper? So what's going to be happening to the long end of that curve?
The interesting thing is the longer you hold these securities, the more you earn. So if you're holding, 19.5% for 180 days versus holding 19.5 for 1 year, the return on the 1 year is often higher than the return on the 180 days. So the incentive is still there for investors to go for the longer term papers, because the shorter term ones, you don't get the same return really. So from the return on investment perspective, it still pays the investor to invest in the longer term ones, which is the 1 year paper.
Okay, so looking at returns, yields have been dropping, especially in the U.S. The Treasury yields dropped since the whole tariff war began. Now, is there any likelihood, I'd like to know, that our own markets here, the fixed income markets, may experience any shocks arising from this? Because we've not seen any drop in yields, or are there been any so far?
So interestingly, what's happening to the US is what we see is a flight to safety. And that's why the US Treasuries is dropping aggressively as it drops. You'd also find that if you watch the price of gold as a commodity, the price of gold is also rising since the trade wars began, or since the tariffs have begun to be announced. What happens is when there is uncertainty, people fly to safety. US Treasuries happen to be one of the highest rated bonds. US Treasuries, along with Japanese bonds and German bonds and gold, are often considered as safe haven assets. So what you find is that when there is uncertainty, those securities begin to increase in price. So the drop in yield from the US translates to an increase in price. Has there been any shocks locally? Yes, there has been, but we'll find that in the OMO space. OMO open market operation bills are largely for banks and foreign portfolio investors. Now, what we've seen is foreign portfolio investors setting up their OMO bills, and then going to buy the dollar. And that's why you've seen a depreciation on the currency as well. About 2 weeks ago, the Nigerian naira was exchanging for dollar around, roughly 1530, 1540 levels. But currently is around 1595, 1600, and that's largely because, or even higher, NAFEX yesterday closed much higher than that. And that's because we're seeing the FPIs that came into the market around 1570 levels or 1540 levels. They are selling off their treasury bills, buying dollars, and running off to safety. So they're running off to buy US treasuries or to buy gold, because they're not sure, what's going to happen to emerging economies if the US continues the trade wars on everybody.
Okay, so what do you think the federal government should be doing at this time to ensure that we protect to stop this inflationary trend from, taking over, especially keeping the FX at a certain rate, not letting it get beyond the 1600 levels?
Yeah, the CBN is trying its best. Last week they sold $197 million. This week as well, they've intervened into the market, and they'll be publishing that data on Friday to let us know how much exactly they've sold. But I can tell you it's over $200 million. Based on their accounts that they shared recently, we know they have the firepower to continue to defend the naira or to keep the currency stable. This CBN has said what they're after is stability of the currency and not necessarily a particular rate. So they have the firepower, to actually keep the currency stable. They will continue to intervene to supply dollars to the society or to the economy to keep that currency stable, to keep the exchange rate stable.
Thank you so much, Caleb Alime, for your insights. As always, good to have you.
Thank you for having me, Will.
So let's look now to the Middle East, where major stock exchanges were positive. Thank God, Trump's tariffs is beginning to fade away. Dubai was up 1.99%, nearly 2% there. And Abu Dhabi was up 0.8%. And still within the region, Saudi and Qatari indexes also traded in the green, 3.29%, and Qatari index 1.93%. Let's look in the U.S. now. U.S. stock futures dropped Thursday in pre-market trade following massive rally on Wall Street, and this was triggered by President Trump's 90-day tariff reprieve. S&P 500 futures fell 1.74%. We're seeing that drop for the stocks in the U.S. The indexes are not gaining like other markets. We see the Dow Jones futures also lost 1.32%. We're seeing the NASDAQ futures down over 2%, marking one of the largest one-day drops since the World War II and since the tariff pause. Now, we're seeing China goods, U.S. left the rates on China 125% unchanged, and the uncertainty about the future for the markets there. Investors are warning of the ongoing market volatility with concerns about what will happen after the 90-day pause and the upcoming economic data. Let's look at Asia now. Asia-Pacific markets rose Thursday after President Trump announced the 90-day tariff pause, including China. Japan's Nikkei 225 jumped 9.13%, really high. South Korea's Kospi surged 6.6%, and we see the Hang Seng Index in China jumping 2.06%. Mainland China's Shanghai Index also rose. We see it up by 1.1%, and then the U.S. raised tariffs on Chinese imports. We know about that, 125%, prompting China to retaliate with an 84% levy. Analysts warn of potential trade disruptions, but note that direct impact on China's economy would be minimal, with exports to the U.S. accounting for just 2.7% of GDP. India's markets were closed for a holiday, but unfortunately in the red. So let's see when they come back from the holiday if it's going to be in the green. So the markets are really responding to this pause. A lot of positivity, and like Trump said, yippee, yippee, yippee. A lot of dancing.
Everybody's going yippee. Yippee. So, Will, while you were on, the CPI, the US CPI came out.
Fantastic.
Yes.
What are we seeing at?
Yeah, so we see that in March, the consumer price index for all urban consumers decreased slightly, 0.1. That's seasonally adjusted following a 0.2 increase in February. Year on year, however, oil items rose 2.4% before the seasonal. Energy index is up. Is down at 2.4, with gasoline prices dropping 6.3. Yes, but there's food index that increased 0.4%, driven by 0.5% rise in food at home and 0.4% for food away from home. So this is for March. We see a mixed picture there.
So does that tell if the Fed is going to hold cut rates? Because right now people are saying they shouldn't be so quick to cut rates.
Yeah, I think the Fed themselves have even said they're not in a hurry to cut rates, even though President Donald Trump wants them to cut the rate.
They don't want to be politicized. They just want to be autonomous and make their own decisions.
The data. Yes. And we see here, we also have to know that this is for March. Looking at all that's happening now, by the end of this month, that's when we can really capture the impact
of this tariff on the economy.
So those are the numbers. It's mixed.
It's mixed.
While urban is down, food is up. Energy is down.
And food and energy is one of those big tickets we have. We're just hoping that if they can stay down, maybe inflation will keep trending lower.
Maybe.
Thank you.
All right, Will, thank you so much. Okay, so let's take a break now. When we come back, we'll head to Berlin. EU, I think they're ready with their response, at least to the pause. And we'll hear that from Lars in a bit. To stay with us. Welcome back. Still watching Business Incorporated right here on Channels Television. Well, we head to Berlin now, where, the story there is, of course, the global trade chaos continues now, focusing more on China. But we've seen President Donald Trump back down from his tariff threat, announcing that 90-day pause on all reciprocal tariffs, except those on China. Lars tells us the perspective of the EU. Hi, Lars. Well, I guess you did say we're going to come back to this tariff, and here we are talking tariff again.
Indeed, Ini. Good to be with you again. Thanks for having me. Well, I can tell you Europe was as surprised as anyone, of course, when the news broke yesterday. Markets here had already closed by that time. Once again, of course, with heavy losses. And then that statement came. One can only wonder how many people had pressured Trump behind the scenes. Obviously, the tariffs had been enormously unpopular, even in his own closest circle. Trump, however, doesn't sell this, of course, as backing down. He says it's a reaction to over 75 countries calling him, offering to make deals. Now, we don't know who called him, and they were certainly not pleading with him in a crass language Trump has himself suggested. But one thing we do know, the European Union is among those trading partners that have indeed offered to negotiate with the Trump team. Last thing we heard about that was that the bloc wanted to initially stick to countering only those initial tariffs on steel and aluminium, and they pushed those off now for 90 days in response to what Trump said last night. So the EU, for their part, was clearly trying to avoid an escalation. They had, however, made it clear that they were looking at certain steps, including taxing U.S. tech giants that have for years gotten away with paying very little tax, and had they done such a step, that would have done some real damage to the U.S. economy.
But why is the EU unwilling to levy the counter tariffs on more goods?
Yes, that was a really big question. A lot of people said they should just hit more goods with counter tariffs, pretty much responding tit for tat to what was coming from the US. And now we don't know if the EU really tried to avoid these counter tariffs or if they're just not talking about it. Again, that seems to also be part, a little bit at least, of a strategy to negotiate with the Trump administration. We do know, however, that some businesses were indeed excluded from counter tariffs, including whiskey and wine. So that would, of course, be good news for those who appreciate a fine digestif. But it's also a sign of what kind of lobbying the EU Trade Commission saw over the past few days, because it was actually French winemakers who protested such tariffs, as they were afraid to be then hit big back with US counter tariffs on champagne, for example. Similar situation in agriculture. Tariffs on soybeans and almonds were pushed off after European farmers had stepped up. They too were afraid to be hit with more counter tariffs on their goods. Now, Germany's economic minister Robert Habeck was very critical of these moves. He said, and I think rightly so, that if every country or every special interest group now tries to protect their particular products, we're not really getting very far in terms of fighting back.
All right, and I wonder how investors are taking all of this at the stock markets.
Yes, Ini, as in the rest of the world, the roller coaster ride here continues, and it's getting just wilder every day. After all, these losses based on fear over trade war, markets today, of course, are going through the roof. We saw it in the US last night already after Trump's announcement came out to take everything back. But markets here had already closed in, so the entire impact is hitting us today. The DAX in Frankfurt is right now up over 5%. Very strong trading day. Now, as much as obviously investors are relieved for now, I guess one has to be really careful with the markets though today. What we've seen over the past few days was that chaos reigns in Washington, that whatever is won today can easily be lost tomorrow. This kind of volatility, Ini, is certainly attractive for high-risk investors, for day traders, but it is destroying people's trust in the markets. At this point, you take in the news of the day, but you simply can't tell what tomorrow will bring.
Last, I think, are you saying or suggesting that President Trump might wake up and bring back the reciprocal tariff pause that he has announced in just about 24 hours? Perhaps you know something we don't.
Yeah, you just couldn't know at all, because we're really in times of chaos, Ini.
All right, now thank you so much for that.
Thank you.
All right, now coming back home, one of the outcomes of the Swedish Crown Princess Victoria's visit to Nigeria is the establishment of the first Swedish trade office in Lagos. It's supposed to be a hub for Africa. The office will help improve trade relations between the two countries. Our correspondent Amarachi Ubani was there and sent in this report.
It's been a busy schedule for the Swedish Crown Princess Victoria's first visit to Nigeria. Days and nights have been packed with official events strengthening Nigeria-Sweden relations. On one of those evenings, she's hosted by the business and diplomatic community in Lagos, led by the Minister of Budget and Economic Planning, Abubakar Bagudu. The evening is focused on celebrating the new Swedish trade office in Nigeria, one that celebrates a free trade between both countries, according to CEO, Business Sweden, Jan Larsson.
Free trade is a basis for hope. because naturally, when we decide to get together, exchange ideas, exchange views, and exchange that trust that it takes to make trade, that will also build hope that there is a better future, that there is a future where we do not have tariffs, where we do not bring barriers between people and countries, and where we work together as effectively as we possibly can in order to solve those issues that we have ahead of us: poverty, health issues, and climate change. So I really see opening of a new trade office from Sweden here in Nigeria as a source of hope and as a source of trust and friendship. Because as the Nigerian saying goes, if the left hand washes the right hand washes the left, both hands will be clean. And I really hope that we can wash each other's hand as Nigeria and as Sweden in the future, because we will both win from that.
The Swedish Minister for Housing and Infrastructure, Andreas Carlson, who accompanied the Crown Princess, announces new agreements already signed with Nigeria and the need for both countries to stick together now more than ever before, given the current global economic changes.
It gives me great pleasure and pride to see how new partnerships are being forged between our countries. The newest examples are agreements that were signed today. 3 agreements that were signed today. The first one between Epicenter and 21st Century Technologies. The second, NCC and Swedish Swedfund. And not at least the third one, that Scania and Lamata have agreed on a memorandum of understanding which will provide Lagos with 2,000 green buses in times of global turbulence and democratic backsliding. It is more important than ever for countries like Nigeria and Sweden to join hands, talking about washing hands, John, join hands and not lose sight of what is needed to continue building a sustainable future.
Planned for the evening is a fashion show showcasing the collection by 4 different designers. Amarachi Ubani, Channel Television News.
And some cherry news for most Nigerians, of course, who use petrol at the pump price. Hopefully this is going to trickle down there, because Dangote refinery says that it has reduced the price of its ex-gantry loading cost of petroleum motor spirit, that's PMS, otherwise known as petrol, and it's now at 865 naira for a litre. That's the ex-gantry loading costs. Dangote Refinery informed its customers of this price reduction today. The price is a reduction of 15 naira from the 880 naira a litre that was sold before now. This latest development comes after the federal government said that the sale of crude oil and refined product sales in Nigeria will continue, that it's not a temporal thing, but a measure that is long-term, and it's a strategic directive that's aimed at strengthening the country's economy. If you had that message yesterday and we had it shared it with you earlier today, the ministry adds that stakeholders reaffirm the government's continued commitment to the full implementation of the strategic initiative as directed by the Federal Executive Council. That message was on the X handle of the Ministry of Finance also yesterday. So Dangote has reacted to that, and perhaps we should see a reduction in the price at the pump now, at least from the retailers who get their feed from Dangote Refinery. Let's go to South Africa, where the rand is on the brink of a record low against the US dollar after hitting 19.75 rand just before midnight, a plunge of over 7%. It's not just the naira that's having this challenge, and it's the weakest level since June 2023. The rand, which has already hit a record low against the British pound, fell a further 0.56% against the greenback as uncertainty around the future of the government of national unity and Trump's tariffs continue to weigh on the local currency. SS currency last traded within a whisker of 20 rand to the US dollar level. Kenya and Israel have signed a 5-year memorandum of understanding for cooperation in the energy sector. In the memorandum of understanding signed between Cabinet Secretary for Energy and Petroleum, Opiyo Wandayi, and the ambassador to the State of Israel in Kenya, Michael Lotum, the State of Israel will support Kenya's efforts towards the production of sustainable renewable energy through capacity building for technical and offering professional support, as well as sharing experiences of the latest cutting-edge technology in the energy sector. And Zimbabwe has officially launched its national energy efficiency policy aimed at optimizing the use of existing energy resources, minimizing waste, and promoting sustainable practices across the economy. This policy is designed to strengthen Zimbabwe's transition to green energy while complementing various incentives aimed at attracting private sector investment in the renewable energy sector. Let's head to the crypto space now and see what's happening. Well, expectedly, the 90-day pause has also brought a bit of relief to crypto prices. So we see for this afternoon, Bitcoin has gone up more or about 6.5% from 24 hours ago, where we had just about 72 or so about this time. So I will see it at $81,689. 13 cents. So that's a whole much better than what we had, the opposite of what we had yesterday. Ethereum has gone up from about 1,004 to almost 1,006 XRP. And so it's a relief for everyone, that pause, 90-day pause, although we don't know how long that will stay. But let's talk to Gilbert now, find out what he thinks about this. Hi, Gilbert. Good afternoon and welcome to the program.
Yeah, thanks for having me.
Great. So obviously it's the pause that has brought this relief to the market, but we don't know if it's temporal or if we're building on this going forward.
Well, during times of war, there are always truths. And so the ongoing economic war isn't an exception. I totally regard the 90-day tariff pause as a signal of a temporal truce that's going to allow different sides to go back to the drawing board, negotiate, and also re-strategize before this ongoing global tension escalates to something beyond control. Especially US and China. If you see the tariff that was put on China and China reciprocating, it shows us that it actually tells us what everybody knows. China is the main shoe. But yes, this pause is a big deal. The market hit uncertainty, and then this pause is giving investors a sense of relief, even if it may be short-lived. But we're already seeing some positive reaction. Short sellers get liquidated. Billions of dollars have been added into the market. But this is giving investors hope, and we are kind of hoping that this should lead to a more stable negotiation down the line, and also a convergence of the possibility of a rate cut 2 to 3 months from now, because much is in Jerome Powell's court. But in the short term, this is going to boost investors' confidence. And yes, it might continue to trigger some market rallies, but investors need to remember that this is a pause and not a permanent fix to the global trade tariff war.
So what should smart investors be doing within this 90 days?
Okay, here is the thing. During times like this, disciplined investors always win. This reminds me, last year during the summer drawdown, I had a friend who had about 100 million naira invested in the market, and he sold at over 19 million naira loss. The thing was that 3 to 4 months down the line, everything went back to normal. And the market did not just went back to normal. We had an all-time high, but he had already lost 19 million. So the thing is, what's the lesson? Volatility is part of this game, but that doesn't mean that investors should panic or sit on the sideline. I think instead, smart investors should stick to their market strategy and then investment plan. There are always two kinds of investors in the market, the active and the passive investor. While the active investor follows the market 24 hours and makes decisions based on what's happening in the market, the passive investor knows what every political leader and business leader knows. If President Trump doesn't deliver a positive outcome on the reason why he started this tariff war, someone else will have his job. So tariff means a bumpy ride on the short term, but eventually long term, everything looks bright. So smart investors should understand dollar cost averaging into most solid and reliable crypto asset is a powerful move. They also need to diversify your holding and cut down exposures into high risk driven investments and look more like value driven crypto assets, especially those that will stand to benefit from easing of trade war on the long term. So short term, I think that smart investors should be prepared more for a bumpy ride, but then long term, the future looks bright.
All right. Thank you so much for that positive message right there, at least for the long term, Gilbert Jopata, financial market analyst.
Yeah, thanks for having me.
That's it on the program. Thank you so much for being a part of Business Incorporated. We're glad to have you there, and we look forward to having you again tomorrow. That'll be at 10 a.m. first for Business Morning, and then Business Incorporated in the afternoon. We have a full day tomorrow, so don't leave me alone. I'll see you then.